Martin from Secret, the channel for learning about trading and investing. Welcome to Quick Market Analysis for tomorrow, April 28th, Friday, the last trading day of the month, 2023 April. So as usual, we would be looking at what exactly happened in the market from the charts. Technical analysis is what we'll basically be doing, and then we try to learn something from it in the process and make a trade plan, of course, for the next day. So here we go. Here is a new updated trend line for the parallel channel trend line for the Nifty charts that you're seeing here. So a breakout has already happened, and this is another interim breakout that has happened, and that's from a inverted head and shoulder pattern, very clearly visible here, right? And a wide range bullish candle, momentum comfortably above the RSI 60. Trend is also bullish and rising. Overall, a breakout day in the Nifty is what we saw, and it was an expiry day as well, post expiry of the financial year of 23 April 23. So Banknifty charts is what you're seeing. Again, you have another wide range clear bullish breakout from parallel channel. This happened with comfortable momentum in the bullish zones and rising trend, and absolutely fantastic move is what has happened. Let's just summarize and see what all went in favor of the bulls today, and then what can be in favor of the bulls for the coming days, for tomorrow basically. So it was a breakout, wide range bullish candle bullishness, fourth day of up move, 17,900 convert. Nobody thought that would happen, but it did happen, and 43,000 also was cool. So it's just 1,000 points away from an all-time high in Banknifty. Can you believe that? Right. So of course it is a trending day, and Nifty was absolutely trending from the beginning, and the Banknifty was choppy but still trending. 0.5% close up and 0.40 up on Banknifty. So clearly the trend line channel breakout happened, the inverted head and shoulder breakout happened, the bullish zones is where the momentum is there in both indices. Trend indicator ADX is also bullish territory, and the moving average is exponential moving average 20, 50, 100, 200 all below convert long back. Bollinger Bands and the expansion for bullish bias, price greater than median, so potential up moves further can be expected because it's almost walking like bands. Which is cool of 2% and 11.42 remains in low volatility reaching. This is major sectors. If you see the indexes for that, the FMCG Pharma Index, Realty Index, Auto Index, all of them are bullish momentum, and only the IT, which lagging behind, that also has climbed sideways, and metal also remains sideways. The major index heavyweights, the stocks that will contribute the maximum into the Nifty 50, in that ICICI Bank, Kodak, HDFC Twins, all of them are making bullishness from the momentum perspective in the short term, while Reliance and DCs are maintaining the sideways momentum. Right. So in fees only stock is having some bearish momentum as of now. So another interesting thing is Fyers has turned to be buyers yesterday with 1,000 crores plus of buying in the cash market yesterday, and remember that has happened after 7 days of selling. And prior to that, they had 9 days of buying. So April was mixed back. 7, 9, 10 days of buying and 7 days of selling. Now again yesterday it is buying. Today most likely it might have been buying again by the Fyers. Most likely, yes, buying 1,600 crores of buying has happened today. So that's a very positive thing for the bulls that the institutions are coming in support. Now what's in favor of the bears? Weekly candle, last week's candle is bearish engulfing and bull trap in Banknifty, so which is negative. It's not necessary that the engulfing candles works always. We have one more day for the month for the week to complete, so tomorrow candle will show that. But as of now, things are looking green. But that's a cloud shadow above us. We have to keep that in mind from bull's perspective, right? So always you remember that we had a 12.5% correction on the Banknifty, and then we just managed to cover that. Right, 11.5% of almost that much of correction has happened now. 11% correction has happened, and we have just 6.5% of retracement and pullback that has come after the retracement of 11%. So keep that in mind that we had 4 red candles in the monthly, and fortunately we may not end up April as a red candle if tomorrow nothing happens. But you have to keep that in mind. We were in a bearish rally just a few weeks back. Right? Now the median term momentum is still not bullish. Right? When you check the weekly charts, the momentum RSI is not above the RSI 55, 60, 50. It's still below that. So it's in the sideways momentum still. So nothing to cheer too much about until the momentum on the medium term also picks up, so that we can expect a new all-time high hit and all that too. That has not happened yet. Now, FI has been selling aggressively for 7 days, and yesterday and today they started buying again. So FI selling is always a trouble. So hope they turn out for buyers for some more days. If that happens, if that does not sustain, we have trouble. Because markets are there are some Fed meeting that is coming next week, and recession fears and all these uncertainties are still there. So if I selling, if it comes in, we have trouble. US market is a condition zone actually. So it is ending wedge. It's the top and it's showing red this week, and it seems like the reversal that could be happening after hitting the resistance on the top. So that's a very we give a close watch because it's the bottom market, and then any big falls or big pullbacks could impact our markets as well. Ruby remains weak, even though there is some slight cool off in the USD INR currency pair, as well as the dollar index also is having some pullback in the cup and handle pattern. But still, still it's not enough. It is not cooled off substantially. It's very close still to the 83.5 all-time high level. So rupee remains to be weak. It's a concern in favor of the bulls. IT sector is a big, dragging factor. IT index is down, and all the IT stocks have been hit back badly. 40-50% of correction has happened, but Infosys dragged down. It's a major index contributor, so that is driving the index from breaking out much earlier. So a few factors for the bears as of now, but more in favor of the bulls is what you can see. Now, just to summarize what we expect for tomorrow. So today it was clear bullish, wide range bullish candle breaking out of trend line channel, inverted hammer and shoulder patterns. All that 4 days of upwards, right? Banking extremely strong. Bullish momentum trend, everything, the short term, everything is bullish. Only bands, upside expansion working on the bands, which is a very low regime. Using as in the top still, in the breakout zone. So it is just showing a symptom of a reversal, but the reversal is not yet confirmed. This week it may be confirmed. So still at the top, give some hope that we could go back. So all the signals still remains to be bullish. So mild bullish is the market we for next day. So as long as 17,500 and 42,000 is kept, things should be fine. Otherwise we are in trouble. Now next week May 1st is a holiday, so it's a targeted levels for tomorrow. Friday 17,800 and 18,000 could be well Nifty moving around. 4500 and 43,500 will be our Banknifty moving around. So stick resistance could be expected at near to 18,000 and some more level till 18,265 to 18,300 that level. So there could be harsh resistance after that. It could be easy. So that's why the trouble is will be heading to next week to that zone. So it may not be easy. It will be pullbacks that can be expected next week, right? But all the directions in the up. So medium term resistances are 18,000, 18,150, 18,200 on the Nifty, then 18,265. 43,150, 43,600, 44,000 is the resistance on the upside of the Banknifty. So downside supports are 16,650, 16,750 on the Nifty, and so it is 38,600 and 37,400. Previous swing lows on the Banknifty supports down there. Previous swing lows sold. So that's the summary. I hope this helps you bring in some clarity for your next week's trade. So if you're not subscribed and watching this, please subscribe right away and share to friends and colleagues, please, because this helps us motivate and keep doing this every day. So thanks for your help, and always have hedge positions and then position size properly, and protect your capital is the key thing. Risk management is the key thing, right? Always have hedge positions, direction or calendar spreads or spreads. Basically, the risk is defined. What you will lose on your capital impact, and you'll be there in the trading for the next day. So that's what you will get always. Right? No matter what kind of trade or strategy, whatever you use, risk management is the key thing, right? So that's it. Mild bullish view remains. Market is bullish, right? But we are heading to a zone where is heavy resistance on the Nifty zone. But we are broken out today. So that's a view. Hope you have good trading days ahead. Happy trading, happy learning, happy investing. Bye bye. If you want to avail the Telegram services, do that. Please, description has a link for that. Thanks. Bye bye.